Well, since last August, the low-cost US broker Robinhood has seen its stock price fall almost 80% on the US Nasdaq exchange. There's a similar story for others, including the original low-cost broker Saxo Bank. Its shares in its owner are down more than 50% in that time. Now, I recently caught up with Saxo Bank Chief Executive Kim Fournais in Singapore and asked about the trend to these lower-cost broking firms.
I think actually it is really beneficial for the market that there are new players coming in. I think the notion that you said that things are for free is simply not true. I mean, if you say that things are for free and you sell the client flows, in Europe it's actually illegal to sell client flows, and there's no businesses that can go on just doing things for free. And you can also see on those business models that getting payment for order flow, trading cryptos, and other things are actually constituting the income stream. So in Europe we have best execution, and that actually prevents you from being able to sell the client's order flow. I think in the end what clients need obviously is a very price competitive service with the best possible products, services, and ability to trade the macro cycle of the economy. And I think that new players that are coming in just trying to say we democratize on price and then it's really not for free. I think there'll be more to talk about there. But I think it's good to have more players coming into the market for sure.
Okay, one of the real trends has been the emergence of exchange-traded funds, which again have been around for more than 20 years, but which have really accelerated over the past 5 years. It takes for a lot of investors risk out of the game. They don't have to become stock pickers. So do you think this also has aided people to get their first taste into the stock market, to use services such as yours or other low-cost broking services, and to be able to really become investors and get an experience before they actually go off and start trying to pick stocks or add leverage to their portfolios?
Well, I think ETFs is clearly something that is a much easier and cheaper way of participating in the broader market or certain segments. I think in the end, surely, as you say, it needs to be easier to access the market, because it has been for a few very sophisticated, professional institutions or professional savvy investors who's been working in the industry. So I think in that sense, democratizing the market, giving much better information, allowing people to make timely, relevant decisions about their financial future and how to impact the world we live in, I think is increasingly important. There's no doubt that ETFs plays a big role here, because it's a much easier access point, it's cheaper and so forth. But I think also what we're seeing in the market now, where clearly there's inflation, it's been there for quite some time. We see interest rates coming up. And I think also you can see that portfolios will have to readjust just because that things are moving in the market. And I think that actually ETFs is a very good foundation for many things in the portfolio. But I think it's also something where eventually investors will have to also have a more nuanced view into the markets and which sectors are going to develop and so forth. There's clearly already big differences. We can see that now. I mean, some companies lost 80% of their value in the past 6 months or so, and others didn't get hurt quite as much. So I think you have to also be more selective, especially if it's not just a continuous bull market that will go on and on and on. And I don't think that's going to be the case.